what is the safest and most reliable method of crypto investing? I've written down my strategy here on this little card, simple and straightforward. And in the next couple of minutes, I'm going to walk you through the process, exactly what the strategy is, how it works, why it works so well, and how you can get started with this method of cryptocurrency investing. So I'm going to share my screen. We're going to dive right in, and I'll try to be as quick and efficient as possible. Now, first of all, I want to be clear what this is not. This is definitely not crazy 100x moonshots, right? I get it. Those are out there. They exist. They work for some people. They're really high maintenance and they're really high stress. This is not crazy 100x returns, moonshots, nothing like that. This is also not crypto mining. Again, I know that exists. You got to buy a bunch of equipment, you set it up, you get rewarded a little bit, and yeah, maybe you profit a little bit. That's fine. More power to you if that's what you want to do. This is not that. This is not a day trading approach. Okay. So this is not the kind of thing where you have to stare at charts 3-4 hours a day and ultimately be super stressed out, waking up at 3 a.m. going, oh no, is my coin going to tank overnight kind of a thing. This is none of that. Instead, this is, in a nutshell, I'm going to explain all the details here in a second, but in a nutshell, this is you getting rewarded for providing value to the ecosystem, meaning the entire broad crypto ecosystem. What does that mean? Well, you may have heard this phrase at some point if you've been exploring the wide world of decentralized financing. You may have seen this phrase pop up. It's called yield farming. Now, I'm not just going to walk you through yield farming. Yield farming is one of the tactics that we use in the Mastermind. It's one of many tactics that blend together to form an overarching strategy. So I'm going to walk you through exactly what that strategy is. And yes, it involves yield farming. And I'm going to kind of, from a 30,000 foot view, walk you through what yield farming is and why it even works in the first place. Okay. So again, my handy dandy little note card here. Oh, wait, you can't even see that. There we go. The handy dandy little note card there. Patience, restraint, risk mitigation, and you'll see I've got a couple of boxes there. I'm going to walk you through what those boxes mean and why they are so important. So first of all, in this strategy, we start with a little thing that we're going to call primary assets. Now, what that means in this context, oops. Sorry about that. A little glitch in the matrix. We're back. So primary assets, what that means in this context is that you become a liquidity provider. So broad strokes in the world of crypto, you got centralized exchanges, decentralized exchanges. Decentralized exchanges rely on users like yourself, like me, like everyone else, to provide liquidity in order to make that platform a safe, reliable, stable place for other users to transact. So you're basically saying, hey, I'm going to contribute to the liquidity pool. And by doing so, I'm making someone else's crypto project, their decentralized exchange platform, more reliable. And of course, you're going to get rewarded for that. So this primary asset, in a nutshell, is LP tokens. And what that means is liquidity pool tokens. If all this is new to you, don't worry, stick with me. At some point, you're going to be confronted with this, and I'm just going to try to paint as clear a picture as I possibly can. Those LP tokens, you have the opportunity to farm them. When you farm your liquidity pool tokens, so you take two assets, you pair them together, you put them on the farm, that farm gives you a yield, hence the term yield farming. That yield becomes, in this strategy, a secondary asset. So what that means is some people will just take their yield, sell it for a quick profit, and carry on. That's one way to yield farm. In my opinion, it's a little more like one-dimensional and shallow, and it doesn't allow for as many profit opportunities and does not allow for as many moments of compounding, which, as we all know, compounding interest, or in this case, compounding your assets and your yield, over time gets you a much greater, exponentially greater return. So we get that yield. Those secondary assets we accumulate, and that's an important distinction rather than just selling them off and being done. We accumulate those so that secondary asset grows larger and larger over time. Then you take that secondary asset and you stake that, and you also earn rewards from that. But you're earning rewards by staking a thing that you got for free because you are, remember, you're the liquidity provider, you're being rewarded. So then you stake those rewards and you earn more on the rewards. So it's like interest on interest on interest on interest, this multi-layered approach. And again, you might have heard the term staking, right? The simplest form of staking is like, oh, let me stake my ETH and like lock it up for 3 years or whatever. And then I get an annual APR percentage return because I staked it and didn't sell it or, just left it as part of the ecosystem. So then you stake and you earn what we're going to call, in this case, tertiary assets. So basically what this means is that when you become a liquidity provider, there are multiple opportunities depending on how you want to structure your approach. What I'm saying is this methodology that we use in the Mastermind gets you going from here to yielding assets. Now you accumulate those, then you're going to earn even additional assets on top of that. Then this is the one where you have options, but in my opinion, after you're yielding this, you can sell these, okay? So we sell these for a quick profit, then we reinvest, we compound those profits back into increasing your primary asset. Now, you could create a second farm, a third farm, wherever you're at in the process, or you could just say, hey, I've got my one farm, it's working really great. Let me just keep recycling through, rinse and repeat. So what it does is your ability to earn, let's say you started with $5,000 on your first farm, your ability to earn would be limited to a percentage of that 5,000 from the yield. But using this methodology, that farm will gradually grow over time, increasing not only just the linear profits that you make, but your ability to accumulate and yield even more in the future. So like I said, in a nutshell, that's the approach that we use in the Mastermind. If you're curious about this and you think, hey, I actually want to know a little bit more about what this really looks like, because I get it. This is just a bird's eye view. I just want to peel back the curtain and let you know, like, this is what you would do if you were a part of our exclusive community where we leverage these tactics in order to play in the safe and reliable, by crypto standards, the safe and reliable space. Like at some point, you got to just admit like, hey, crypto is going to be risky. I think it's reliable. That's just my opinion. But crypto's on the higher risk side compared to like whole life insurance or some of these other financial products that exist in the traditional market. So we're saying, but if we're going to play on that risky side, let's do risk mitigation from our handy little 1, 2, 3, patience, restraint, risk mitigation. Let's practice risk mitigation by leveraging a strategy that allows us to play in this space without taking on any unnecessary complexity or any unnecessary risk that we don't absolutely have to. This is, again, my opinion. Adding complexity doesn't make it better. In fact, more often than not, systems theory, anytime you add complexity, your system becomes less reliable. So we're boiling it down to as simple as possible. And then all we do throughout the whole process is practice patience and practice restraint. Now, one question I get all the time, what's the returns, Brandon? What returns can I expect? Well, number one, no, there's no guarantees. Nothing's guaranteed, not even in the traditional market. I'm sure everybody thought they had a guarantee, and then 2008 hit and, there goes 80% of your portfolio value or more. So no, there's no guarantees. But here's the way I like to think about it. What's a reasonable expectation? In other words, like what's like a best case scenario? What's a like maybe not so great, and then your reasonable expectation is somewhere in the middle. So let's call this reasonable expectation, okay? In my opinion, if you leverage this approach and you stick to again, safe and reliable. And I'll make another video exactly how we select out which farms that we play in. It would not be unreasonable, in my opinion, to say, hey, maybe I land somewhere between 50% and 100% returns, all things considered, because with this approach, there are actually 6 distinct profit opportunities versus like a buy low, sell high with day trader approach, which is 1 profit opportunity. This creates 6 distinct profit opportunities. And once you factor in compounding, you might say, hey, somewhere between 50 and 100% return on investment. That's year over year on average. And this is where people get really skittish, because maybe one year is amazing, but maybe the next year is not so good. But if you have a long-term mindset and say, hey, my time horizon, let me just plan for 12 years. It doesn't have to be 12 years, but I'm saying if you plan for that, the amount of compounding and returns that you have the opportunity to experience increases exponentially. Okay. So here's how this works out. With 100% year over year on average, which, by the way, this would be like, in my opinion, best case scenario. I get it. People laugh at me for these small crypto returns. They go, oh, I got 50x last year. I'm going to get another 50x this year. I go, great. If you can do that, if you are like genius level mathematician and you know how to like organize charts, go for it. More power to you. That is not this approach. This approach is for people who just want to invest. Super low maintenance. Once you get it built, it's like maybe 10 minutes a week, and you're able to just like enjoy the ride the way that you would with any investment vehicle, which is put your dollars in, let them work for you, and gradually accumulate returns over time. So if I started with 10,000, okay, and I left it in for 12 years, and by some miracle got exactly 100% year over year on average, the math never works out as cleanly as that, right? It would come to 41 million. Now, am I saying you're going to make $41 million? Absolutely not. I'm just saying, let's say everything worked out perfectly over 12 years, $10,000 would turn into 41 million. But that's a lot of money. And most people, myself included, we don't necessarily need that much money. Okay, this is the principle of get closer to your goal rather than always chasing more. You don't need to chase more. All you need to do is know that, like, hey, at 41 million, even if I hit 1/10 of that, I'm still turning 10,000 into 4.1 million. Okay. Again, these are just example numbers. It's not guaranteed. I'm not telling you you're definitely going to make this. No one can guarantee you anything in the crypto market, in the traditional market, anything. I'm just saying, hey, if you assume a best case scenario, and then you say, man, if I even got 10% of a best case scenario, like that's still pretty damn good, right? So look, what I tell people is no guarantees, but if you think in terms of, can I reasonably expect somewhere within that range? Yeah, you can. And then again, you go, what if it just doesn't go that well? And all I get is a 30% year over year on average return. You're still tripling what you would get in the traditional market. The traditional market, if you get 8% to 10% year over year on average over time, you're actually crushing it. People would go, wow, you're like a savvy investor. So all I'm saying is acknowledge that when you're playing in a new space like crypto, yes, there's opportunity, but the opportunity comes at a cost. And that's why the 3 primary values that we work with, number 1, patience. Okay. Don't expect to cash out in a year and have a 10x return on your money. If that's your expectation, like this is just not the approach for you, and that's okay. But you're going to want to go play in like the meme coin space and day trader, and try to like watch the charts and leverage trading and all this other stuff. Like you can do it, but that's not what we're doing over here. Patience, and then restraint. Restraint simply means when you get that little itch that we all get to, like, oh no, I should sell everything. It's all going to tank into the ground. The whole crypto world is going to explode. You exercise restraint by taking a deep breath, talking to other people in your community, which that's what the mastermind is. It's over 100 people who are actively invested, who can like support and guide each other. And then the last one, of course, we've said this before, risk mitigation. Risk mitigation means we're going to play again, by crypto standards, we're going to play in a less risky, safe, reliable space rather than trying to play the wild risk it all for the big reward kind of an approach. Okay. So that's all I got for you for today. I'm going to post some other videos here and there. So stay tuned. I'm going to kind of walk you through some of the other pieces of how this works and why it works. But in a nutshell, that is what we are doing in the mastermind. If you want just more information about the mastermind, go ahead and drop a comment beneath this video. Just say like, hey, I'd like to find out more. I'll jump in on your DM and I'm just going to give you a link. And the link is going to have a document, a Google Doc that gives you just the summary of what it is, how to get involved. And then you have to fill out an application form because this is not a come one, come all kind of a group. Like I said, we got about 100, little over 100 people in there right now. And I'm not trying to grow this to 10,000 or 20,000 or whatever. The idea is to keep this as a small, tight-knit community so that I'm able to provide like personalized one-to-one support and guidance over time. Okay. There it is. That's the strategy. Okay. If it doesn't make sense yet, that's okay. The more you expose yourself to it, the more it will make sense over time. Catch you later.